would say, the analysis that we did in this report, this is exactly what our clients have been doing, particularly among hedge funds. And once, sort of the impeachment story exploded on the scene, we found that clients weren't so much thinking about that issue. The first question they were asking is, how does this affect 2020, and starting to game that out.
And is it fair to say, well, it wouldn't be quite as bad as everybody thinks? I mean, I know you went into great detail about particular areas that would see significant potential hits and others that might not.
Yeah, I wouldn't use that phrase, to be honest. I mean, we actually think it could be quite a problem for the market in the first half of the year, and that's really the message that we tried to send with the report. We sort of said two things. Number one, if you look at the timing, we really just wanted to remind our investors how the primary season plays out. It really is going to be in the spotlight in the first quarter of the year, and that's also when people consider the year ahead outlooks typically on Wall Street. We also know that investors from our investor survey work have expressed a clear preference. Trump is clearly viewed as the positive outcome for stocks, Biden as a neutral, and a Democrat other than Biden as a negative. And then we sort of dug in with our analysts, and we found that when we asked them to think about specific industries and specific issues and how they would interact under a Warren presidency, and we also asked them to consider a Democratic sweep, we found that when we mapped it out to the GIC sectors, almost all of them had some sort of adverse impact. Now, some were more mixed. Some had positive offsets. Some were very clear negatives. But it was really, I would say kind of 9 or 10 of the major sectors had an issue. And 64% of the industries that we cover at RBC, our analysts put in the bearish or very bearish camp.
Some have looked at the change in short interest since her poll numbers started to rise, and it's not clear. I mean, tech, for example, hasn't seen the increase in short interest as, say, healthcare. So which sector is most vulnerable?
So I think what's interesting is there's clearly a difference in valuations and the level of policy risk. And what's interesting to me is areas like energy, financials, healthcare. That was what we sort of labeled those as very high risk. And really our analysts were mostly in the very bearish category on those. The valuations do look very cheap relative to the broad market. Now, an area like technology, which we would consider high risk, so not quite in that upper echelon, that's where we do see more elevated valuations. So there's some conflicting factors there.
It's funny because your note got described to me by a couple of hedge fund managers as being less negative. And I guess that really, given how negative it is, goes to show how negative Wall Street may be or is right now in terms of any anticipation of this as a possibility.
Right. And I think, what we really tried to focus on is when we think this risk is going to be priced in the market. And we think that's really more of a first half event next year. I think
so ahead of the election.
Ahead of the election. And we do feel like, investors have been doing work on this now. We know that investors have already been starting to price this into healthcare stocks directly. So that same September investor survey I mentioned, we asked investors, what do you think is most at risk under a Warren presidency and Democratic sweep? And healthcare was the thing that they highlighted. I can tell you from my conversations, that is already getting priced in. Our biotech team has been hearing that as well.
Now, if a moderate were to, it is very early. We haven't had any primaries yet. There is always the possibility that there will be an unexpected surge from some candidate, potentially even a moderate in the Democratic ranks. Do you think that would have a beneficiary effect on some of these equities?
Well, so we actually asked our analysts to consider different possibilities. And we said, what happens if the Senate stays in Republican hands? What happens if Joe Biden comes in? And there were differing views by different industries. But generally, as a group, those were viewed as less negative outcomes. I have been telling investors it's too early to be certain about anything. We are still over a year away. But I do think you need to keep all possibilities on the table. And now is the time to be doing the work.
We're going to get flooded with poll information for the next 12 months, obviously. What's your favorite? What do you think? What polls should people discount and pay attention to?
Well, the one that we track very closely is the Real Clear Politics data that's looking at the primaries. And we think that's really been sort of capturing the momentum that you've seen on the Warren side. It's shown, some of the breakdowns in some of the other candidates. That's the one that we think is probably, if you were just going to pick one to keep an eye on, the poll of polls. I like to look at a lot of data, not just one data point.